Great. So we're online. Hello, everybody.
All right. Welcome. Today's episode 8 of Validvent's Cryptotax Update. Welcome, everybody. I'm Johannes from Validvent, and with me here today are Georg Brameshuber. He is the founder and managing director of Validvent, and legendary crypto Twitter OG and NFT expert.
Hi, Johannes.
Good evening. Absolute pleasure to be here.
One moment. Sorry about that.
Yeah, but from where are you tuning in? Legendary. You're still in Paris?
No, I got back on Monday from Paris and back to Vienna for a couple of weeks. Then I will be going to London for another meetup, and then the next big conference that I'm planning to attend to is gonna be Dubai. But I gotta tell you, it's pretty good now that you're at a conference like Paris, and obviously the market is doing great. The vibes are good. People are not as depressed as they used to be over the last 2 years, so that's definitely a pleasant sight.
Yeah, there's absolutely some buzz around. So yeah. I mean, we are at almost getting to our all-time high, but I don't take the word into my mouth because otherwise we find it away.
Yeah, it was a very exciting day, and I'm here with you too again, because I had an echo in my ear because I had the YouTube live stream tab open, so I was able to hear everything twice. All right, yeah. What I missed in the introduction is yeah, we are streaming live on YouTube, and I definitely want to point out that right at the very beginning that all viewers are very welcome to comment and ask questions on YouTube, as well as if you prefer to use Telegram, you can join the Validvent Telegram channel. The link to it is in the description of the YouTube live stream, and there you can use your Telegram handle to ask questions if you don't want to use your YouTube handle to do so. All right. So today everything is about airdrop farming and NFTs. It seems like this kind of meta started a couple of months ago, maybe in Q4 of 23, October or November. Please correct me if you think I'm wrong there, but that's where I started really seeing an uptrend regarding that narrative. And well, obviously there's a lot of opportunities there. It still has everything what you do on chain or also on centralized exchanges. Obviously, also have fiscal implications, and this is what today's talk is going to be about. Yeah, maybe legendary. What do you think? Did I get that right? That some kind of airdrop meta started in beginning of Q4 last year, and how do you see the role of NFTs regarding that airdrop farming, potential airdrop farming meta?
Yeah, that's a very good question. I think if we maybe take 2 or 3 steps back, definitely agree with you that there's been a massive uptick in interest for airdrops over the last quarter of 2023. However, airdrops are not a new thing. They've been with us in the last bull cycle as well, right? We kind of started it off with Sushi, Uniswap, and DeFi Summer all the way back 3 years ago, but it's definitely gotten way, way bigger. I think that is caused by multiple reasons, one of which is obviously that on Ethereum, you have a way richer ecosystem when it comes to layer 2 solutions that are trying to scale Ethereum, which all have their own basically assembly of protocols. Most of them have their own token or will have a token coming as well. So that is one thing I think that we are seeing. We are seeing way more, and I think this is kind of what peaked that activity in Q4, that spike that you just mentioned. We're seeing the Cosmos ecosystem getting more active ever since we had the TIA airdrop, followed by the Dimension airdrop for TIA stakers, and also having components of those airdrops being basically distributed to Solana users and to Ethereum users. So it seems like airdrops, in a sense, are going cross-chain. And if you think about the purpose of an airdrop in terms of trying to just attract a new user base, working as a user acquisition tool, you kind of want those kinds of vampire attacks, and you want to address an audience that is on another chain. And to the second part of your question, why NFTs, and if we are seeing those two in a link, the airdrop meta and NFTs, that is definitely something new. That is something we haven't seen in the cycle before. And that makes a lot of sense from the perspective of those protocols, of those decentralized apps, layer 2 solutions, whatever they are distributing those airdrops. They want real users, right? And the more attention there is on airdrops, the more people you will have who try to farm those airdrops or to game those airdrops, in a sense that they're showing up with 30 wallets, with 300 wallets, and are just trying to maximize their potential airdrop income. And this is called, obviously, Sybil farming. And this is something that protocols don't really want. They want genuine users. And NFTs, or prominent collections, prominent profile picture projects, are a very good proxy. On the one hand, if someone take a collection like Pudgy Penguin sitting at 19-ish ETH, so sitting above the 70K mark, if someone had spent that amount of money on their profile picture, has that in a wallet, has it connected to the Twitter, to the X account, the likelihood is way, way higher of that being a real person. That is on the one hand. And another benefit from the protocol's perspective, which I think is important to mention, because to me, it's the main reason why I think that we will see this trend of NFT-based airdrops continue, is that if you are a project like Dimension or like Wormhole, the cross-chain bridge, and you make the token accessible to the youths or the DGOTS community or the Pudgy Penguins that we just mentioned before, those people, that community, will rally around your project. They will be excited. They will post about that on X. They will talk about that in the Discords, in the group chats, etc. So it's just an additional marketing measure that is basically free if you think about how you want to distribute the token, which is also a marketing measure in terms of user acquisition. And because you get that vocal community pushing your project more, projects are noticing that, and they're definitely extending that airdrop meta into NFTs because they get A, real users, and B, users who are vocal and do additional marketing lift for them for free.
Yeah, yeah, that totally makes sense. Yeah, thanks for the insight, and I also think, as you said, airdrops are going cross-chain. I think that also makes a lot of sense for projects to choose like specific NFT collections that are tied to a specific ecosystem. So when talking about Dimension, I mean, obviously they catered to ETH in the form of Pudgy Penguins. They catered to Mad Lads, to Solana in the form of Mad Lads to Solana. They catered to Cosmos Eco users in the case of Bad Kids. Which I heard should also be eligible for the wormhole airdrop. I'm excited about that. Yeah. So yeah, that actually makes a lot of sense. George, well, what do you think about that, and what might be what might be the implications from your point of view?
Yeah, I mean, I just want to comment on one, but before that, this is an update. So for every one of us, so if anyone has questions, comments, so just add them in the chat or use it on Telegram channel. So we're happy anytime to reflect on it and discuss it openly. Maybe also at a comment from my side, I'm also reflecting on what you said, just legendary, is just the emerge of, now speaking from the viewpoint of financials and economics, that airdrops if you may call it airdrops farming or however you want to call it, is emerging as a new form of creating real yield, which is to some extent pretty massive, especially if you look at the fundamentals of finance and economics, that you have an asset which is genuinely not interest bearing, but by the way of ecosystems, Web3 models involved, by the tool of airdrops, by the creation of tokens, by the token economy itself, it creates from a financial perspective a yield on the perspective of the token holder, and that is a new chapter, and not necessarily in the history of finance and economics, but definitely it is a new chapter, and it's definitely a new asset class and a new form of investing due to Web3 native, I would say, ecosystem engagement, or however you want to call it. I think Legendary just boiled it down beautifully, but exactly that's also it in financial terms, and that's totally interesting to see that.
Yeah, sorry, Legendary. Thoughts on that?
Yeah, I think adding to your point, Georg, I think you put it beautifully, saying that's ecosystem activity that is being incentivized, and I think we see that in two different ways. One of which is the social one. You have exactly those marketing heavy campaigns like Portal Coin. Portal Coin is launching tomorrow as a simply put, as a gaming infrastructure protocol, but it's just managed to garner a massive amount of attention because they're launching on Binance, on the Binance Launchpad. They are historically the project that had the most BNB staked into the Binance Launchpad ever. So this token gets an insane amount of attention. That is the social aspect of airdrop farming. That is obviously benefiting people who are influencers in this space and who have massive reach. But that is just a part of it, because the other point of the more native ecosystem activity, which you just described, is the more participative one in the sense of you're using the protocol. If it's a layer 2 solution, you're bridging your funds to that layer 2 solution. You're using protocols on there. You're transacting on there. And I think, and that might be helpful for everyone listening in, if we look at some of those eligibility criteria, if that is okay for you, Johannes, as well, because I think it just ties beautifully into the conversation. I think that Arbitrum, as a layer 2 solution, when they did the airdrop, they set a very good blueprint that we've seen many other projects have been using, obviously adapting a bit, because you can't just use the same set of criteria, because otherwise everyone could game an airdrop, and that's, as we just said, not the point of it. And if we look at some of the qualifying actions that Arbitrum had defined for their airdrop, it was, as a layer 2 solution, bridging funds into that layer 2 solution. It was conducting transaction during 2, 6, or 9 distinct months, with each higher category that you were able to achieve giving you a higher multiplier on your airdrop. Interacting with more than 4 different smart contracts. That is an interesting one that we're seeing expanding across other layer 2 solutions like ZK Sync or Scroll, where you now have basically platforms that offer you a one-click service to interact with multiple smart contracts at once, deploying your own smart contract. Then you had a set of criteria that just looked at how many transactions you conducted, with the highest category being 100 plus transactions. And then the aggregated volume of those transactions that you did, with the brackets being 10K, 50K, 250K. That didn't matter if it's one transaction with 250K, or did like 1,000 transactions with 25 bucks. And then also they looked at the amount of assets that you ultimately bridged into Arbitrum with the exact same buckets, 10, 50, and 250K. Again, it didn't matter if you did it in one transaction, you just kept bridging back and forth.
Yeah, very, very interesting, very insightful. I mean, Oliver asked a question, very good question. What are green flags? Funny that you put it in a positive way, and red flags of airdrop farming, since there's a lot of fake out there, obviously. I mean, I would just put the question to you both, because you're both, I would say, OGs and degens. I mean, that's always an open. That's also an open question for me. I mean, I'm always coming back personally to the fundamentals, looking at projects, right? If you can at a very, very, very early stage get at least on a desktop review preliminary understanding of what's really the fundamentals of that, upcoming airdrop, the announcement, of the background of the team, and so on. If you identify even something, how you both approach it, Johannes, Legendary, on Oliver's question.
Legendary, you want to go first?
Yeah, happy to take it first. Green flags from the perspective of evaluating the protocols that I want to airdrop farm, essentially. I am looking at basically the VCs who are involved in whatever that kind of project is. You just want to see a good venture capital backing in there, because obviously VCs have an interest to recoup their money and to make a significant premium on that. And the easiest way for them in this space is to do it via a token. Little of the venture capital activity is straight equity. The majority of it is simple agreements for future tokens or other way to structure SAFT agreements. So a token play is likely. You can also look at the investment history of certain VCs. A good example being Newman Capital. Newman Capital being one of those VCs that essentially invested in basically everything that managed to launch on the Binance Launchpad. That typically gets a lot of traction. The design of the airdrop campaign per se, is it just social farming and ref code sharing via multiple layers? That is maybe a bit of a red flag, but again, there are exceptions to that, because PortalCoin did exactly that system, interact with their posts, pushing activity on every single post for them to into the millions. And we will see the conversion mechanism tomorrow, how those shards will convert into PortalCoin tokens. But it is to be estimated that the biggest farmers there, just from the social aspect, will make 6 to 7 figures on the airdrop. I think another very important green flag is the tokenomics. How much is being distributed in an airdrop? Is there a single airdrop? I think there is more to it than just figuring out a good number and saying a 20% airdrop allocation is good or bad. I think the more important picture is the bigger one, to see what is going on with the team. When are they unlocking their funds? When are VCs unlocking their funds? How do cliffs look like? You take the example of Starknet. I know, you asked for green flags, but Starknet is a good example for a red flag, because you had the TGE, you had the token generation event. And in April, basically everyone thought that the VCs will start their cliff once the token is launched. It did turn out that the Starknet token actually launched almost 2 years ago. So basically VCs would unlock the first portion, which is 15% of the token in April. And everyone thought that's going to happen like 1.5 years down the line. That led to the situation that Starknet had to pull back on that and actually cut their VC unlock from 15 to 0.68%. So definitely good tokenomics that are transparent. Just that transparency, they can even find out where the token allocations, what's the distribution strategy, what buckets exist, how does cliff investing schedule look like. With many projects, you can't even find that, but having that and having a solid set of venture capital firms backing that is a good sign. And then if it's a more like, say, financialized airdrop that also expects you to deposit and lock up funds in the protocols, and I would definitely try. I mean, I'm not an expert for reading smart contracts and auditing them, but I would definitely have a look who has audited their smart contracts. Is there more than one auditor? Are there ongoing audits? What is the security aspect of that? And do the founders and do the team have a previous track record of doing successful projects? Best example being Pac-Man with Blur, the NFT marketplace, now launching Blast actually tomorrow as a layer 2 solutions, more than $2 billion total value locked. So those are probably the 4 or 5 things I'd look at.
Yeah, I mean, probably the latter is the most crucial part, because obviously we see backing, tokenomics, or because you were mentioning Starknet. These are, I mean, almost institutional grade, I would say, airdrops, very mature. So with a very strong institutional background now, also from their sheer organization. I dare to say that they're even coming forward as a corporate institution. But beware, in Web3, talking with corporate environments, that's always something giggling them around. But in super early stages, it's definitely the fundamental, as I said, the latter smart contracts. Johannes, where are you looking at? Green flags, red flags?
Yeah, thank you for the thorough insights. That was a lot of green flags there. I want to go the other route and want to point out maybe one or two red flags here. Also because we mentioned bad kids and the Cosmos ecosystem, and I'm not sure, but maybe Oliver is also referring to the Cosmos ecosystem where the airdrops usually you would just have to stake some tokens natively, usually like Atom, Osmo, and maybe one or two others, and then you would just be eligible. Maybe sometimes for liquidity providers, but if you just stake, then yeah, you just get random airdrops, right? You just have to claim them, and it's very easy. And it happened quite a lot of times, especially in the Cosmos ecosystem, that there were announcements that, for example, Atom and Osmo stakers would be eligible for a specific airdrop. But when interacting with the contract claiming it, it actually would turn out to be a scam. And I want to point out that, I very much like the Cosmos ecosystem. However, this is something that happened a lot in the Cosmos ecosystem, and you have to be very careful there. And when I think about claiming an airdrop on the Cosmos ecosystem, for example, then I very much research what I am going to claim there. And if it's if it says, well, I'm eligible for the token with the ticker XYZ, and I've never heard about it, even though I follow, I don't know, more than 1,000 people on Twitter, and I do this every day from Monday through Sunday, and I've never heard about that token, and well, I'm wary, and use caution, and just actually claim the ones where I'm 100% sure they're legit. Whereas if I'm not when I'm not 100% sure, I just don't claim them because it's just not worth it. You risk your whole wallet, all your funds. So be careful about that. And as I'm on it, one more point on that. It seems like that scam posts on Twitter or on X, they are bigger than they ever were, especially when talking about airdrops. No matter which project, which Twitter handle from a legit project is posting about an airdrop, at the very end, like the next post just below the last post of that thread of that project is gonna be a scam. And you have to be very careful because it's going to be the very same profile picture. It's going to be the same Twitter name, and it's going to be the very same Twitter handle, except for one letter probably. And it's going to have a premium or some kind of badge, and it's going to look pretty good. So be very careful when proceed with caution. That's my point here.
Yeah,
Maybe
it's funny
one
that-
little. Sorry,
yeah,
Georg, go for
legendary.
it.
No, legendary. That's good.
Maybe one little point to add to that, because you said don't FOMO in and claim if there's an airdrop you never heard of, you didn't expect. There are very good content creators on X who are exactly being pinged because they can audit smart contracts. You have people like Cigar being a 0x CYGAAR on X. And when there's a big airdrop that happened with LFG, let's fucking go on Solana, when nobody was sure, is this a scam or not? Hundreds of people are pinging him. Wait 1 hour, he's writing a thread, analyzing the situation and giving you a go, it's safe to claim, and explaining why he thinks that, or telling you, nope, this is a scam and you better shouldn't do that. So even if you experience FOMO in wanting to claim an airdrop, like rest assured that enough people see that, enough people have the same thoughts, and you will have clarity within a couple of hours by people who are far more knowledgeable on the technical sides of things, if it's a good thing to do or not.
Yeah, absolutely. I mean, and there we're coming back again to who is showing integrity in the market, and there again, it's the credibility you see on social media, the background of the people. So simply by we're talking smart contracts audit, simply by auditing the content of some profiles, that gives you exactly that advanced research you need, especially in super early stages, if there is someone new portion out there. Because I think we all agree, social media is good. It's an awesome ecosystem, but to some extent also with a lot of toxic content out there. That's absolutely. Yeah, maybe one crucial point is, because I was touching a little bit on the financial aspects, is that obviously in the grand scheme of things, airdrops are super interesting from the perspective of also engagement and also wealth management, to the extent that it really depends of what is, I would say, the utmost claim towards the airdrop, of whether it is a financial activity at all, or whether it is merely our participation in a community. And as long as it is a genuine participation in a community, partaking without any services rendered, and now I start using all these this financial literacy terms, then obviously, if you're not touching that area of commercial or whatever activity, that remains genuinely Web3. And there is also a very good example. I keep trying to tell content creators out there. As long as content creators out there create freely, without any, again, legal context out there, without any rights and obligations to what anybody or against anybody, is clearly then an activity out of free will, which is necessary then a commercial activity. And that is generally a crucial point in Web3. So as long as you have the absence of rights and obligations, as long as you're genuinely acting as an individual, so not building up professional agency, and as long as if you receive a remuneration, obviously, if you get an airdrop, you receive an airdrop. So you could see that simple form of an airdrop as a form of remuneration, but that remuneration is the native token of that project. It really shows that you have skin in the game and you're partaking as a stakeholder in a project. That shows that you're not taking it as a form of remuneration for services rendered. That shows that you are a genuine, I would say, pillar of that ecosystem. And by that, the airdrop activities as a new form of genuine Web3 activity is out of any commercial activities, or is out of any forms of also then taxable or other financial constraints, capital long activities or questions. So that is the beauty about airdrop. As long airdrops remain genuinely Web3, which is obviously again hard to find, and again all corporate activities should kept definitely at bay when using airdrops as a mere, I'd say, marketing tools on whenever corporate instruments are coming in, where obviously an agreement is on the table in order to have an agreement of future tokens and something like that. So that's the point with airdrops I really want to make and highlight here, because airdrop is a beautiful thing, as long as it kept a genuine Web3.
I do have actually a follow-up question for you on that, Georg, because we're seeing a strong trend in the airdrop meta right now, which is that loyalty point scheme, if you want to call it like that. You see platforms like Camino Finance on Solana, or Parcel, where you have tokenized real estate. You deposit liquidity, you get 3 points per dollar that you deposit in liquidity. You get 2 points per dollar that you long or short a certain real estate market. So you basically already have a clue that those points, that is everyone's assumption, will be converted in a token. Does that token, that loyalty point meta that we're seeing right now, still fit with what you just said on the genuine Web3 activities, or do we have to look at that differently?
I would see them still as a Web2 loyalty scheme, because it's not different to general Web2 loyalty schemes. I'm looking at the picture you had on X when you were traveling over to Paris. Obviously, you went on a nice plane, you got nice tickets, you got a nice breakfast. Obviously, you were collecting miles there. I think you were in business class, I'd say. So you obviously had a good loyalty program. It's exactly the same. And I guess that is, I would say, a Web2 question or a Web2 phenomenon. Loyalty schemes means for the simple use of services or other features, by that receiving loyalties or some form of consideration, that is not a whatever financial activity. Only if you take that loyalty program or that loyalty rewards then in a commercial activity, for example, typically then using your loyalty rewards as for commercial travel, because you have your mileage, you have your Sonata class, and then you get your free travel. That's of course then a financial activity which would be also then be taxable. But just the consideration of the loyalty itself, that is not a financial activity, as long as you not make use out of it in commercial terms. But again, I think here is the crucial point, that these loyalties are not a genuine new Web3, I would say, phenomenon. This is a Web2 phenomenon brought into Web3 in a Web2 form.
And in one more small follow-up question that as well, because you spoke about how this is all not commercial activity. And for many airdrop farmers, obviously there is the temptation to farm on more than one wallet. Some of the most prominent farmers that I know of farm with 300 or up to 300 wallets. How can we look at this in terms of, is there a set, I know there's no set amount of wallets where it suddenly becomes commercial activity, but how would you generally think about the amount of wallets that people are using and how that?
I mean, it's the same elsewhere. I mean, how many physical wallets you're wearing with you? I mean, obviously everyone has just one with them, but at home, right? If you, I know, I'm not telling you how many physical wallets my wife has. I don't know which one has yours, Johannes, you're legendary. But simply on the fact that you have, I'd say, more than 10 physical wallets at home is then a commercial activity. So it's the same in Web3, right? Simply due to the fact that you are amassing a lot of wallets, that's not per se a commercial activity. Simply the fact that you have a very high, number of wallets. Just jumping into this call, on my table was is a guy with in 2022 amassing more than 800K transactions. So that's a lot, but simply speak, that's nothing else than a set of data, right? And simply by amassing a very high number of data, that's not per se qualifying as, I would say, commercial activity or a financial relevant activity. What is then starting relevant is if you are amassing really 300 wallets, and then you get starting on, you have your own, starting on your own web page. You're starting, giving paid advice and something like that. Then it's starting, of course, this is then a nexus to commercial activity. But simply by having 300 wallets, that's not the case. And I think that's already pretty clear now. Everyone understood it. I guess at the beginnings, 2017, 18, 19, 20, everyone had kind of the reflex out there. Okay, man, wow, transaction ledger of 2,000 transactions in a year, insane. That has to be commercial. No, I think everyone now got it. That it's the beauty of the technology that you amass data, obviously, and if you're active in that space, it's all a set. It's a data entry. So every step you do is a data entry. And simply by being in Web3, you just create a strain of data entries. And simply by moving in Web3, it's not a commercial activity at all. So I think that's now clear. And I think that's also clear to some extent on the global level. Some, I would say, jurisdictions are still lagging behind there. But on a global level, I think this is understood, because this is a genuine feature of the technology that you create and amass data when being active in Web3.
Oh, thank you for that. I have a follow-up question on that. But before I ask my question, I just wanted to point out again on the YouTube live stream, you're able to ask your personal questions. If you don't want to dox your Google account on YouTube, you're very welcome to join our Telegram channel. The link to it, to the invite link, you can find in the comment just below the live stream right now. Yeah, so thank you, George. I have a follow-up question on that. Because you were stating that's like just all data. What does it mean regarding regarding your data documentation? And is all that data relevant in a financial or from a financial or fiscal point of view, or is that data that has something to do with fiscal or financial implications and some parts that don't have one? Or could you elaborate on that?
Yeah, that's a good one. I mean, the
might be
point
almost
is,
a philosophical one, but
yeah, sure. I mean, the point really is where data becomes dust, right? In the sense of the language of dust, right? Where you just amassed sort of data which is obviously not relevant. What is really the point is, I think that is now understood. That's also kind of already maybe a little small announcement for our next Cryptotax update. We had the opportunity to educate ECB staff on data analytics on chain, obviously. And with data analytics on chain, you beautifully can draw everything, right? Even the solvency of financial institutions or crypto asset service providers. So imagine a crypto bank, which obviously has 300 wallets, as Legendary just said. And if you know all the wallets, of course, that crypto bank is fully transparent to all stakeholders, and especially to the I would say banking authority, right? So because the solvency could be checked at any time, real time, on chain. And what the crucial point is really here is living from your Web3 activity when using or making use of a Web3 activity in a form that you try to disclose it in a compliance process. And there comes the beauty of the set of data, right? Because as long as you can disclose that your data is complete and accurate, obviously no one has a problem with that set of data, and obviously not a problem with your Web3 activity, whatever you want to achieve with it, right? Just use it for your private, personal, professional wealth. And I think that's what we see is understood in the first place. I think if we look at all the institutional players going towards Web3, I think the VCs were the first understanding that, so they don't have that much problems with that. And I think it's now really starting that also even, I would say, the absolute laggards, and the most outstanding laggard out there is of course the ECB and ECB stuff. They now even understand the beauty of data as it is when it's fully integrated, full complete and full accurate on it. So that's definitely and value add, and I would say a very special feature of the beautiful thing we call Web3.
Right on. Thank you very much. What did anybody want to follow up on that, or may I ask an additional question, or somebody want to bring up a new topic?
No, I think that's just fine. I mean, just staying on that very clear. I mean, just having a lot of data doesn't make the life beautiful easy, right? I mean, handling the data is a challenge. Of course, we take that, but if we look at the opportunities, then it's rather a green flag than a red flag.
Right on. Well, thank you very much, and also thank you for the potential spoiler of our special guest for the next episode. Well, we'll see. It's actually Cryptotax Update from Validvent is always happening the very last Wednesday of the month, and you are able to ask your personal questions here if you want to do that. I think we just got another question. Hold on. Yeah,
Is
there's
there any nice tool out there overviewing all transactions? I mean, free of charge. There are a lot of free of charge tools out there. Use any Cryptotax tool for tracking and tracing all your wallets. Especially if you're airdrop farming, whatever you're really degen in a lot of ecosystems. Just link your wallets to any tool. You know, they're usually just for the tracking and for the tracing free of charge. And that's definitely worth to look at. All the other commercial aspects in the tool, they come later on if you want to create a tax report or any other form of compliance report, but simply for tracking and tracing your transactions, all these or most of the tools are free of charge. So just to name a few: Cryptotax Calculator, Blockbit, of course, and coin tracking, of course, just to name. But those three we are keen working with.
Maybe one tool to add to that from a purely airdrop specific perspective is wensir.xyz. I will post it here in the Zoom chat so we can take it to the Telegram group, because it's spelled a bit differently. It's WENSER.xyz, and that's basically a tool where you can input the wallet address, select an upcoming airdrop, whether it's layer 0, ZK Sync, Linear Scroll, Polyhedra, Eigenlayer, etc., and then check the eligibility criteria if they are disclosed. If not, they just use a model that is based on Arbitrum, and it kind of shows you how many transactions did you do on ZK Sync, for example, as a layer 2 solution. How much volume did you bridge over there? How do you fare against other airdrop farmers? Are you in the top 1% or are you in the bottom half of that? That is a very helpful tool to just get an overview for a specific wallet and protocol and kind of benchmark yourself against the other airdrop farmers and enjoyers.
Yeah, no, that's absolutely a good one. Thanks for that. Every now and then there are a lot of tools are coming up, so just let us all make sure that the ones are still around in 2, 3, 4, 5 years. But as the majority of the website looks at it, it definitely is. But that would be also one of the requirements. If you have a nice tool, it is a tool which stays, and there is obviously coin tracking insane, because coin tracking was there in 2013 already. Imagine that legacy in that space.
Yeah, as we head into the last quarter of today's episode of Validvent's Cryptotax Talk, there's another question coming in from Chris Narf. This might be a one for Georg.
Yeah, is it allowed to label all swaps bridges from one of my wallets to another of my wallet to non-taxable? Absolutely. I mean, that's kind of I would say even a no-brainer. It's clearly allowed. Why? Because simply if you're having physical cash in your physical wallet, transferring it into your bank account at the next bank checker, that's obviously not a financial relevant or taxable relevant activity. So that's absolutely a non-taxable activity. The only thing is what always comes to the fundamental is when we talk about bridging of assets or wrapping of assets, because the question always is, if you really change from one ecosystem to the other ecosystem, of whether that underlying asset or that position you're having, that asset you're having, really has the same, what I would say, is still the same asset. Because obviously, if you bridge an asset from, not dropping names here, but from a layer 1 to another layer 1 or to a layer 2, you always the counterpart in the technical fundamentals are obviously completely different. And here, obviously, the interesting question is of whether you are in form of bridging or in form of wrapping of tokens and assets. You're changing your positions. In fact, you could look at both sides of things. So I would say from a purist view would be So if I would change from my Bitcoin max view, my Bitcoin to any, I don't know, wrapped Bitcoin on any other chain, of course, it's not Bitcoin anymore, right? So I'm in fact, I'm not transferring. I'm trading my Bitcoin against the wrapped Bitcoin, so to speak. But from an economic viewpoint, obviously, it's the same position you're having because the exchange rate is obviously the same, and the tokenomics for bridging the assets is obviously in place. So that is one thing, Chris, to look at. But just the simple swap bridge from one wallet to another is typically not a financial activity and non-taxable.
All
A
right.
good question, though.
Thank you. Yeah, again, heading into the last quarter of today's episode, I would suggest to make an example maybe of a potential NFT holder who is eventually going to get an airdrop. Well, I root for him or her. So the question in the direction of you, Legendary, would be, well, what NFTs, what collections might be worth to look at from a risk-reward perspective, in your opinion, or regarding well, any parameter you think might be important, and then head over to George to see how this well, theoretical user, what kind of fiscal implications his action might have as he is holding NFTs of a specific collection and getting airdrops for it. Also maybe depending on if it makes a difference where this user is located, may it be in Germany, in Austria, or maybe in the US, if that's okay for you two guys.
Yeah, sure.
Sure. I would like to kind of split your question into two. One maybe being a bit of an overview of what we know in terms of NFT projects getting airdrops, and the other part of it, what I think is an interesting opportunity and why. In terms of like a more general overview, we had Madlets getting the Dimension airdrop, but they will get more airdrops such as Backpack, which is the wallet that is being built by the team behind Madlets. You had Pudgy Penguins benefiting from the very same airdrop. They are very, very expensive right now, or relatively expensive, depending on how you like to look at things, sitting at 19 ETH. They will most likely get a ZK Sync and a Layer 0 airdrop as well. You have Azuki, who are looking at a Magic Eden token, who might get their own token, the Anime token. You have Sappy Seals, who are definitely also ramping up the airdrop gain, are more on the affordable side at around 1.3-ish ETH, not only for Nifty Island, but also the founder has teased that they are working on connecting to more protocols for airdrops. You have a speculative thing with Ghostly Ghosts being the first, or one of the first collections that is omni-chain available via the Layer 0 technology, which is probably going to be a very significant airdrop. There's speculation going on there that they might get an airdrop. You have on the Tensorians, but for them, I would say it's quite late. They are for TensorTrade, which is a NFT marketplace on Solana, but there have been multiple snapshots. And you have the WASIs, which have seen a 70-80% pump over the last couple of days. And that is where I will get into what I think is an interesting opportunity, because Loomdart, the founder, has been judging the Blast competition. So what is the Blast competition? You have Blast as a layer 2 solution, and that kind of connects to the beginning of our conversation where we talked about track record by teams. Blast is by Pacman. Pacman is the founder of Blur, most successful NFT marketplace, most successful NFT lending platform, launching their own layer 2 solution actually tomorrow, with already a bit more than $2 billion locked in TV, more than $2 billion TVL. And it seems that WASIs will get access to at least 4 or 5 airdrops coming there. And if you look at the specifics of the tokenomics of the Blast token that is to come, you can see that half of the token is directed to devs deploying dApps on the Blast Layer 2 solution. And there's been a competition, the Blast competition that I mentioned, to basically see what are the most promising projects out there. And they all have one thing in common, which is that their dev allocation is almost fully, or if not even fully, going to be redistributed to people using the protocols. So the question here from an NFT standpoint becomes, who are people who have a significant stake in the game when it comes to Blast? You have people like in the Ethereum ecosystem, OSF and Mando with their collection, Rekt Guy, REKT Guy, who have both heavily invested in that ecosystem, who have said there's going to be an airdrop for, I think it was Juice Finance, which is one of the project winners on Blast. So the question then really is, tomorrow you will have that mainnet launch, you will have many protocols launching there, and everyone tries to get a piece of not only that Blast airdrop cake via the dev allocation, but also the native tokens of the projects that ought to launch on Blast as well. And you have projects like Wasis, where we've seen that announcement already. So you basically have to ask yourself the question, okay, they had a 70-80% run. Do I think that the potential airdrops that they will get there, or even the 4 or 5 confirmed one plus potential others, are worth it from a financial standpoint to do that? Because you've seen that massive run up, and the question is, do you want to buy into that pump? And then the extension of that is to figure out who are other people, who are the projects who have skin in the game when it comes to Blast, because this, I think, is a very recent example since it's launching tomorrow. Like direct guys, like other collections who are fighting, quote unquote, for airdrop allocations for their communities as well. Because I think it's important to understand that there's massive pressure on founders. Because if you are in a community where your founder is not riding this airdrop meta, you will not have that financial gain of your founder using their network to give you that benefit of a Blast airdrop, of a ZK sync, or whatever airdrop it is. People might look at another collection who is more successful at that and direct the attention there. So from a founder's perspective, it is becoming more and more difficult to ignore that airdrop meta.
Yeah.
Oh, thank you very much. Thanks for that insight. I head over to my NFT marketplace of choice. Oh, no, joking. Sorry, George, your turn.
Yeah, I mean, there is one big rule out there. I just want to, I would throw the hammer at, is really make sure and getting understanding of whether that airdrop you're participating is something where you receive the airdrop as a form of consideration for something in return, right? And it could be either personal data or something like that, but it's it could be very minimal, but just sharing your digital face somewhere, that also would be something be considered as a consideration for something in return. So just to be aware of that. Of course, it's a gray zone of what is really something to receive something as a consideration in return. It's an absolutely gray zone, but just to have that awareness, but everywhere where you are simply in a loyalty scheme, for example, by simply using a service or using a platform, that is not a consideration for in return. It's simply a loyalty scheme. But everywhere where you engage proactively, where you expect obviously a consideration in return, that's the very gray, I would say, grayish area, but just be aware of the gray area and be aware of the consequences both way, right? So if you really are, I would rather say, Web3 native, using airdrop in the purest form, then of course there is no something for a consideration for in return. Whereas everywhere where you engage directly with services in the grand scheme of things, then this consideration for in return obviously has a commercial activity, and everything in between. We're discussing marketing activities, we were discussing loyalty activities, we were discussing genuine Web3 activities. All it is a little bit in the gray zone, but just be aware of those 1, 2, 3 parameters, which is there anywhere written down or claimed rights and obligations? Is there an obviously outlined commercial activity And thirdly, what is the form of consideration? Because if the form of consideration is in the native token anyway of the project, then obviously you're rather a stakeholder than being active in a form of commercial activity. So that's one big point I want to make here to everyone get away of it.
All right. Yeah, I think it's time to wrap it up for today's episode of Validvent's Cryptotax Update. I wanna thank you very, very much for participating today. Thank you so much, Legendary, for being with us today. It's been awesome. Thank you for your insights. Thank you very much, Georg. And I want to point out that besides the Validvent Cryptotax Updates, which is a monthly online event, we also have a monthly on-site event called Tech Talks, which takes place every second Wednesday of the month. On-site Tech Talks are every first Tuesday of the month. Sorry about that. The next episode of on-site Tech Talks will take place at the lovely startup house in Vienna with two great industry leaders. First, it's Gitis Said from Arweave. We just saw them yesterday opening their testnet, and you might saw the search in the AR ticker. As well as the second speaker for next week will be Martin Fröhler. He will speak about his project, the US permissionless dollar, which he co-founded together with crypto legend Willy Woo. And we will be very, very happy to host them next week. And lastly, we have our monthly online tech talks that take place every second Wednesday of the month as well. So you can join from all over the world and tune in for that. Legendary Georg, did I miss anything?
No, thanks so much. Just the USBD, I mean, their headline is the only stable coin you really own, collateralization ratio 110%. So curious what's be there. Yeah, the only stablecoin you really own. I'm curious to see the Bitcoin Maxis view on that.
Yeah, me too. Yeah, we'll find out next week on site in Vienna. Yeah, we look forward to seeing you in the next episode of Cryptotax Updates, or of another of the many Validvent events. I invite everybody to join us on our socials, and especially join in the Validvent Telegram group, which is only a place where we not only announce new events, but you also have the opportunity to chat with the community and ask questions. Yeah, it's just a great place to hang out. The links to all that are in the description, and I very much look forward to seeing you soon.
Cool.
So,
have a good one. Thanks all.
Thank you for
Bye-bye.
having me.
Bye-bye.